Hello people. So a lot of people asked me to give a review on the trades that I've actually taken. I've decided to go ahead and do that. And now I'm about to give a review on the trades that I took in January 2020. So this is a chart of Bitcoin against the US dollar on a 1 hour time frame. I always recommend people go to a larger time frame so they can actually see what's going on. So you can either go to like a 4 hour or daily. Just make sure you go into a larger time frame. I'll go to a daily time frame. Look for the month of January. I'm marking out the month of January so we can easily see when we go to a smaller time frame or lower time frame. So now I've marked out January. In between here is January. Now we're going to be using technical analysis. So technical analysis is the use of past market data, which is all this information here, to help you predict future market trend direction. So that's what technical analysis is, and that's how we're going to be using the technical tools to help us to be able to maneuver and profit from the month ahead. So pretend we can't see what's actually happened. And these are actually trades that I actually did really take. So the first thing that I recommend people do is the use of, determining the overall daily trend. So you can use the method, there's a few methods you can use, like lower highs, which you can see here, and lower lows indicate a clear downtrend, which is evident. So, or you can use like a trend line where you draw the trend line. You could say once you get a break of the trend line, you're in an uptrend. As long as you're below the trend line, you're in a downtrend. So at the start of January, that would mean that at the start of January, we're in a downtrend. So if you was to use this method and you was trading with the trend, that means you'd only be looking for sell signals. So even though we're using the daily time frame to help get the overall trend direction of the market, that's not necessarily the time frame that we'd be entering on. Me personally, I enter on the 4 hour time frame, so a lot of you may know already. Let's just go to that time. Let's go back to January. So from this period, if we were using that method, I'm just helping you. What I'm going to be doing is I'm going to be showing methods that you can use to help you identify overall market trend on a daily time frame. So we've got the trend line saying if price stays below the downtrend line that you've drawn, that means you're in a downtrend. If price breaks this level, then you're in an uptrend. If you trade breakouts, by all means, you could have had a signal around here and entered the market. I don't trade breakouts personally, but that's an option that you've got. For me, so you can, that's one method. You could use the trend line, or you could use moving averages. So I'll insert a moving average, let's say 50, and you could say if price is below the 50, so whenever price is below the 50, you're in a downtrend, or if price is above the 50, you're in an uptrend. So again, if you're in a downtrend and you're trading with the trend, that would mean that you're looking for sell signals. Or if you're in an uptrend, so anything above this 50 level here in the month of January, that would mean you're looking for buy signals. So as we can see, previously, we could say we was in a downtrend, but now we had a trend line break, and we've also got a moving average break, so it could indicate that we're in an uptrend, or there's a trend reversal, that we're in an uptrend and looking for buy opportunities. This is on a daily time frame. So now that we know that, we can say if we're using this method here, which is the moving average method, we can say that after this date here, which is, if you look at the bottom, the 6th of January, we're in an uptrend and we're looking for buy signals. So go to the 4 hour chart. That's the time frame that I actually trade on. I'll remove this now. Also, not just to add, the moving average that you use on a daily time frame, even though it will still be applied to the lower time frame, they'll give you different readings and different crossover points. So once you've used it already and got what you need, got the information that you've needed to obtain, from the time frame that you're using, then there's no need to apply the same sort of rules to a lower time frame. So because of that, we'll just delete it now. So I did say from the 6th of January, we're in options, so we're looking for buy signals. For me, I'll show you the trade that I actually took. My trade happened here, so I entered at this level. I entered at this horizontal blue line here with my stop loss at around this level here. And as you can see, price continued to rally after the following week and made a profit. As a risk reward ratio, so we risked 190 pips. I managed to cash out around here, and I managed to cash out, I think it was a 1 second. So if we do 1 second, 540, at this time I managed to cash out a 3-to-1 profit ratio. So even though, you know, I missed out, I didn't really miss out because I didn't have a trading opportunity. Even though the market is moving a lot, when you're following your trading strategy, you have to stay within the guidelines of your strategy and stay within the rules. So only when your rules are followed do you then enter. For me, that happened around this level. So I entered at this level here, and I managed to cash out a 3-to-1. So even though I had to wait for the third week in January, the date being 24th of January, I managed to make a 3-to-1 profit, which is relatively good. So I can show a method that you could use to help you get into that level by the use of Fibonacci. So again, once we've established, when we use the daily trend, when we use the trend line break or the moving average break and close, the market then turned into an uptrend. That means you're looking for buy opportunities. So if you was using the Fibonacci, that means you'd be looking for levels of support. So that means you draw the Fibonacci from the low to the high. There's two ways you could draw it. I'll show the first one, well, the main one, which is from the low, which is there, to the high, which is there. Remember, the key levels for Fibonacci are between the 38.2 level and the 61.8. I like the 66.0 level, so that means that my area of buying is between these two levels here. I can highlight that now, which is around here. And as you can see, price entered this level a few times, and then price went off in your direction. So this is a way that you could have used the Fibonacci to make a profit. I didn't use Fibonacci, I had a different method, but I'm just showing you ways that you can use all the technical tools to help you develop your strategy and profit from. So this is a trade I took and I got the 3-to-1 profit. There will be losses that I show, obviously, because you know you can't always make a profit, but I'm just showing an example of the trade that I actually did take. So that could have been your method. You would have put your stop loss at the low, or you may have put it at the low of the 61.8 level or the 66.0 level. That just means that you, instead of your risk being, say, 190 pips, it would be 747 pips. You could have made higher or whatever, depending on how you manage your trade. But once you're in it, or what your takeout method is, you could have possibly got a larger profit as risk reward, or you know. But my method that I'm happy with, that I chose to use, I managed to get a 3-to-1. So that's the example of how you can use the moving averages, the trend line, the Fibonacci. Also, there may be, if we can try and use a oscillator, you can use the RSI standard. Let's see. You can see that around this level here, there is divergence. And so you can see that low, price made a lower low than that low, and you can see the RSI made a higher low than that low, so that's bullish divergence. Or you could have waited for the pullback and entered around this level with a lower amount of risk. It's totally up to you, totally up to you, and dependent on how you're trading. But that's an example of how you could have used the RSI as well. So I've just given a couple of examples on how you can use these methods to help you enter the market. So I hope that helped. If you have any other questions, just let me know, and I'll make some videos on the questions that you have. But I hope that helped. That's for January. Again, you know, I only had one trade for that month, so unfortunately I can only show you the one trade. I'm not going to show any other trades for this month because I didn't have any. But again, depending on what sort of trading style you have, or trading strategy you have, you know, you may have more opportunities than others, or you may have more losing trades. But for me, I'm happy with what happened. I'm happy with the performance at that time. I got a 3-to-1, and that's my system. Again, if you got any questions that you'd like me to answer, by all means let me know. Send me an email, and then I'll make a video and answer the questions.